You're listening to the Investing.com's weekly crypto podcast with your host, Clement Thibault. Hello, everyone. Have a nice Sunday. Welcome to Investing.com's Cryptalk, our weekly crypto podcast where we go over the weekly news and we try to analyze the most interesting bits of the past week. So I'll start like I do every week with saying who is this for. So like I just said, we'll be going over the weekly news basically, and what we aim to do is give you about a 15 to 20 minute podcast where you can just listen and get caught up with most of what happened in the crypto markets in the past week. So every major development, new technologies, we have a bit of everything for you every week. So yeah, that's what we're doing here. If you're interested, please drop a comment, or if you have some criticism that you'd like me to hear, you can find me on Twitter. But more information at the end of the podcast. So we'll go right away into the topics of this week. All right, so this week we have a few interesting topics for you. And I think that this week we've had discussions really on both technology aspects, financial aspects, and even ideological aspects of crypto and Bitcoin. So we're going to be talking a little bit about everything. So first, we're going to be talking about a new advertising campaign from Gemini that calls for more crypto regulations. And two Winklevoss brothers just went on record saying that they believe that regulations is what is hindering Bitcoin from becoming the new gold. So we're going to be talking a little bit about that and saying what we think. Next up, we have some delays in Ethereum development. Constantinople was supposed to be the upgrade this week, but it's been pushed back to February. So we're going to talk about what this upgrade is without getting too technical. And we're going to talk about why it's been postponed and what does that mean for Ethereum. And our third topic is going to be about Cryptopia, which is a New Zealand-based exchange that got hacked this week, or allegedly hacked this week, as the authorities are not yet willing to comment on the subject. But we're talking about something between 3 and 13 million New Zealand dollars stolen. So we're talking about a major hack here. Some of the funds were transferred to Binance and then frozen. So we're going to be talking about that as well. So we have three really great topics for you this week. And let's dive right in with revolution need rules, but do they really? So our first topic is about Gemini and its new advertising campaign. They actually had a full-page New York Times ad. If you're around New York these days, you can see them on buses, train stations, and all the New York shenanigans where you can advertise. They're pretty much everywhere. And basically it states in big, bold letters that revolution needs rules. And what they're trying to do is they're trying to get Wall Street and maybe more normal people come on board with crypto by telling them, listen, we're going to make it safer for you. We're going to give you all the rules that you need. We're going to give you more bank-like rules that will protect you. And if you bank with us, which is basically, I believe that at the end, that's their end goal. They do want to become a crypto bank. They don't want to replace the old system. They just want to become the new system for crypto, which is legitimate, but just it's good to know that that's what they want to do. And if you bank with us, if you do business with us, then you won't get burned like if you do business with, other exchanges. Our third topic today is mentioning, a crypto hack, so an exchange hack. So definitely there's a lot of uncertainty and a lot of wild west going on in crypto world still. So does Bitcoin and crypto really need rules? So on one hand, yes, like I completely agree that, scamming projects and raising funds for non-existent projects is fraud. It's straight up fraud. But when we're talking about Bitcoin itself, the fact that if you send the transaction, then it's irreversible and that the blockchain is immutable, does that need rules, or is that rule enough? And you have to be careful within, those set of rules. The rules of Bitcoins are really pretty clearly defined. There's stuff that you can do and there's stuff that you can't do. And that's about it. And it's up to you. There's a wide margin for the user, to do what he wants with this tool. And he can do good things. He can do bad things. And he can also do, dumb things. And there's a lot of mistakes to be made and a lot of cryptos to be lost because of mistakes. So by saying what they say, Gemini is kind of undermining, the cryptocurrency scene and what people want to see in crypto, which is financial freedom and, and financial sovereignty. And if you introduce too many rules and that, you can reverse transactions, or if you can, protect people, then by protecting them, you are almost always infringing on someone else's right. And you are, and even if you are not, you give yourself the opportunity to do so. For example, EOS, the blockchain that can censor transactions, it's a rule, right? And it tells you, listen, if we get hacked, we'll get your money back. Don't worry, we can freeze the funds. But on the other hand, the entire Bitcoin project is about not letting yourself get abused by the system, and that there is no system that can say, these are your coins and these aren't your coins, and we take them now. So it's a very interesting line to go. I think that at the end of the day, if what they want to appeal to is mainstream users and not cryptocurrency enthusiasts, I think they're doing a right thing here, because I look at it from a certain ideological perspective, and crypto and Bitcoin especially really talks to me on that level. But for a lot of other people, no, they maybe want to explore the asset, but they don't necessarily want to take financial responsibility. And, I've talked to a lot of Bitcoin people over the years, and I've really told them all, listen, but a lot of people are just not interested in taking financial responsibility, and they would like to have someone to nanny them in a way, or provide a safety net. So this is kind of what Gemini is trying to do. Honestly, it's interesting. It's appealing to an entire different, class of people that maybe need some help getting into crypto. And if that safety net is that help, then, we'll just see how things work. Regarding now, Bitcoin kind of taking over gold, that's, in a way, and I can see how Bitcoin becomes digital gold. I think that, Bitcoin has properties. The fact that it's highly divisible, or that, it's impossible to confiscate. I think that those are some of the properties that made gold so popular over the last, few thousand years. But I still think that a technological investment today will not necessarily so easily replace a long-standing 3,000-year-old tradition of having gold as a last resort. And while it's all, it's all intersubjective, it's all in the way that society grasps it. And society still sees gold as that, safe haven kind of asset. And I think that it will take some time for Bitcoin to become that. It's just 10 years old. And I think that by trying to make an asset that is 10 years old, good as it may be, replace a long-standing tradition of 3,000 years. And we're not talking just first world here. We're talking about countries where, people are still storing gold and are still really using gold as a way to hide their assets, or as a way to protect their value. So I really don't see it replacing gold that easily, just for the fact that one is 3,000 years old and one is 10 years old, even though the technology is obviously superior with Bitcoin. So, okay, so we've addressed that. I think it's always a good, ideological debate on Bitcoin and what we want Bitcoin to be and what it represents for each and every one of us. So I think that even though many didn't like the campaign, I think it brought us to talk about what we expect from crypto, what we expect from Bitcoin. And I think that those are healthy decisions that are going to guide the path that Bitcoin takes in the future. All right, so that's up for our first topic. And let's move on to Ethereum development. So earlier this week, the Ethereum core devs were supposed to release a new network upgrade that was actually 5 different network upgrades, but that ended up not happening. So first, I want to talk about the upgrades themselves. Now, I don't want to get too technical because I don't think this is the platforms to do it. So I'll just, quickly gloss over the technological aspect of it. So there's been 4 different upgrades to the code that allow developers to do different things that enable new tools. So I really don't want to get into those because I feel like it's going to be messy to explain, and this is just not the point. One of the big changes that were supposed to happen that I do want to talk about is the difficulty adjustment. So basically what Ethereum is trying to do is that it's trying to move to a proof of stakes system instead of a proof of work system. So what they decided to do was basically make the finding of blocks through hashing and the rewards a lot smaller than they are today. And so this will deter people from getting into the proof of work and move people to proof of stake. Now, one of the problems, obviously, is that if you've been following Ethereum development, the proof of stake is not even close to being ready, and proof of stake is not even close to being ready and developed and deployed on the Ethereum blockchain. So that's an interesting thing. But at the end of the day, what happened? So this upgrade was supposed to roll out on Wednesday. Come Tuesday, one chain analysis, which is a research firm, actually discovered a vulnerability in one of the proposals. Now, this vulnerability was, unlikely to be exploited, but still, this is not something that, you want when you release new software. You don't want your backward software, so smart contracts that were already written on the Ethereum platform, to be vulnerable now because of something that you've changed. So what happens is that the core Ethereum devs, they met on Friday and they decided, to postpone it. Now, they decided to postpone it 6 weeks. And in this case, we're expected to see this upgrade hit the network on February 27. Now, this process tells us a lot about, the technology and the environment that we're working on. And I've been saying for a while that Ethereum is still a big experimental project, and today it's still worth $13 billion. So this is still a lot of money for something that we honestly don't know if it's going to work, where it's going to work. It's never been applied in real life before. And the thing is that usually when we're talking early development of technology, it's done, under wraps. So for example, Google is developing something, Apple is developing something, and they can develop it in the privacy of their own companies, right? So you never know what works and what fails. And the valuations are not crazy. So, Google is willing to invest a certain amount of money into a project and see if it succeeds or not. And that's what they're risking. But they would never risk $13 billion, to see if an experiment works, which is what we're seeing with Ethereum today. Now, if that wasn't enough, everything Ethereum developers do is completely public. So anything they do affects the public and affects the public holding and the public blockchain. So it's not like they can just sweep, failures under the rug. So their stakes are much, much higher, both in the fact that everything is public and in the fact that the chain itself is still worth $13 billion. So I've said in my crypto outlook last week, I've had the honor to go and talk to the British Society of Technical Analysts, and I told them that I see 2019 as really a limbo year for Ethereum, where it's stuck between what it was and what it wants to be, and it's working to get there, but it's not really there, and it won't get there in 2019. So it's really stuck in no man's land, and this is worrisome for any investors and everyone who's slightly interested in the fundamentals and the underlying development of what's going on. It's worrisome that you see Ethereum, a $13 billion project, really stuck in no man's land and struggling to advance. And even if they have a roadmap, you can see that, the slightest hiccup can push things back a month and a half. So this is basically a warning for Ethereum holders to follow the development process and see that everything is happening as you would want it to happen, because at the end of the day, you might get something that is entirely not what you expected and entirely not what you wanted. So, I see the potential of Ethereum, but there's so many things that could go wrong, while we're getting there. And it will take at least another year to get somewhere close to where they start to want to be. We're talking, multi-year projects here. So if you want to be involved in that, that's great, but you should know that this is what you're getting involved in. All right, from Ethereum to our third topic of the day, the Cryptopia hack. So an exchange has been hacked in New Zealand, and we're going to check out the facts and see what really happened there. So our third topic of the day is Cryptopia, a New Zealand-based exchange getting hacked. So first, the facts of the matter. So the police were called late on Monday night to investigate the theft of $7 million worth of cryptocurrency, and they're doing what they can. But at this moment, and it's almost a week after, we don't really know what happened with the funds. We don't really know if this was indeed a hack or an inside job, some kind of exit scam like we've seen plenty of in 2017, 2018. And since the police won't say what happened, or they can't say what happened, Reddit and Twitter and a lot of good people on the internet have been tracking addresses of transfer of Ethereum and tokens. And so right now it's estimated that between 3 and 13 million of New Zealand dollars have been stolen. So we're talking a major hack here. One of the interesting parts of this story is that you can actually trace coins from Cryptopia to Binance, which is, I believe, the number one exchange today. And what happened is that once Twitter and social media actually got, the proof that coins were transferred to Binance, then Binance CEO intervened and said that they had frozen some funds that they could see originated from Cryptopia. And this is a very, exciting example of how things develop and how things develop organically. And who would have thought that the exchange, would be the one to make the law, and the exchange would have the ability to freeze funds and to not transfer out coins that originated from a certain, source. So, it's really interesting to see how those things just continue to develop, and how and what place will, exchanges have and users have and even the regulator have in the ecosystem. So that's between 3 and 13 million New Zealand dollars that just went away at some point. And I've heard some skeptical voices, in the community saying that as exchanges lose a lot of volume, they lose a lot of the business that they've had, and they lose their ability to make profit, because an exchange's way to make profit is to take a commission on every trade. Now, if people aren't trading anymore, then it's very hard to pay, your employees and to pay yourself. I believe right now Cryptopia is about 90 employees. So we're talking a lot of money in payroll. And it's entirely possible that this operation was on its way to being not profitable anymore, and that this is just a way to close up shop, to save face, not saying we failed in any way, and to keep, between $3 and $13 million. Now, I don't know if that's what happened. And obviously, I'll let the police do its work and interrogate whoever needs to be interrogated. But it's very interesting how crypto makes you think of all the adversarial possibilities. And you never really know what happened, and you always have to assume that, everyone's a potential scammer and everyone is in it to take your money. And I think that this is a very, it's a lesson for life in a way. And crypto in many ways is kind of a dystopian version of the future, when you can trust no one and you have to rely only on yourself. And in a way, that's its advantage and its disadvantage, the way it kind of opened up your minds to thinking about, possibilities that you didn't think were possible, that you didn't believe, people would do. Now, funnily enough, the CEO of Binance used this opportunity to say that you should only, leave your coins on exchanges, and even went as far as to say that exchanges can protect your coins better than you can if you have your own private keys, which sounds kind of ridiculous. And I think that a lot of the community caught on to that, and were like, no way. The standard advice is really have your own coins, never put on an exchange more than you want to trade with, because, you'd rather to have your security put in your hands than having your security put in people's hand that you don't know, that you're not sure you can trust. And I think that Cryptopia is a great example of that. And as time goes on and as the crypto markets continues to weaken, we'll see more and more, exchanges hacked. And I think that it was one of my 10 crypto predictions for 2019, major crypto hacks. So here, it's not even 2 weeks since I published that, and we already have a hack. And I think that we're going to see a few more until the end of the year. So be safe out there, keep your coins. And that's the news for this week. Let's move to the outro. Okay, so that's it for this week. Thanks for being with us here on Cryptalk by Investing.com, our weekly crypto podcast. I'm Clement Thibault. You can find me on Twitter at Clement Thibault. That's CLEMTHIBAULT. You can drop a comment if you're seeing it on Investing.com. You can drop a comment on the analysis article itself. And I'm looking forward to hearing from you guys, to hear what you want to, what you want us to talk about. If there's things you want us to cover or topics you want to know more on. We're really looking forward to your criticism and your thoughts. So again, thanks for being here. We'll be back next Sunday with another episode of Cryptalk by Investing.com. Have a great week, everyone.